Crazy Monday morning. Stock market is in correction territory. And will this be a huge correction, or is this going to be a crash? We're going to go over some numbers, going to look at some things. And when we're looking at it, I made a video on Friday, on our Saturday, explaining that this is going to be really bad. People didn't believe me. Now we're looking at the Japan market index, and the Nikkei, or whatever you call it, is down 13%. And we're looking at it, and this is going to have consequences in the whole US economy, the US markets. And Asia's down, Swiss index is down, all of them are down. Bitcoin dropped 17% in the last few days. So if this isn't a correction or a crash, I don't know what is. If you're not thinking that it's coming, then I do not know what you're thinking, and I can't really help you. But let's look at what happened yesterday, or today US time, with the Japan stock market, right? So I have this guy. I was really trying to find a good video to explain it that's really simple, because I don't know if my viewers know all these terms. So I found a great video, and we're gonna watch it.
Why did global stock markets and Bitcoin crash overnight? Here's your simple 2-minute explanation. Now it's all down to this thing called the carry trade. The carry trade is the definition of get rich quick scheme, right? Because what you're trying to do is borrow money, taking out loans at very low interest rates. Where's got the lowest interest rates in the world? In Japan, right? So we take out a huge bank loan in Japan for 0.3%. Now we know we can make a lot higher return like that elsewhere in the world. For example, UK interest rates are over 5%, US interest rates are over 5%. So we need to change this Japanese yen into a currency that's going to earn us a higher interest rate. So we do a foreign exchange, right? Now it takes 155 yen to buy $1. So we've moved our yen into dollars and pounds and everything with higher interest rates, right? So now you've got all this money and you go and invest it. You invest it in Bitcoin, you invest it in Apple, you invest it in Nvidia, AMD. So that's great. Now you've got all these investments that are earning high returns, and you've got a debt that you pay very low interest on. What could possibly go wrong? Well, what went wrong is last week the Japanese central bank did a surprise interest rate hike, which makes the yen a lot more attractive. When it's attractive, then the exchange rate changes. In fact, it went from 155 to 143. So remember, when you change your money from yen into dollars and pounds, that was at this exchange rate. Now it's moved. So when you come to pay money back, you're not receiving nearly as many yen as you did when you put the currency trade on. This is a problem. In fact, it's a big problem because the value of your money in yen terms has dropped from $1 to 92 cents, or an 8% loss. In fact, to pay back your loan, you need $1.08. Which might not sound very much, but when people are borrowing hundreds of millions of dollars, then suddenly that gets ugly. And what happens when it gets ugly? Well, they have to sell all these assets. In fact, they don't have a choice because their risk managers are telling them they've got to get rid of these assets and raise the funds to start paying back the loans because the losses are too big. So you raise that money and you pay back. So what happened overnight is people tried to change their money back, and they're demanding more yen, which makes the currency appreciate even further, and it makes the problem even bigger. So this is the first time many of you will have seen a market.
So this was a pretty good explanation, right? So they need to sell high value stocks to cover some of their losses because the bank raised interest rates. And now we've been there before, where banks try to cover losses and sell stuff. One incident I remember was when Reddit rebels tried to squeeze AMC and some other ones, and it would have had the same kind of effect on it. But last time, what happened was with AMC and all these other ones, that they just shut trading down. But now, since it's a global stock market, you can't just shut trading down, right? And now they're selling their Ferraris to cover their Priuses, right? So now you got to get rid of these high luxury, high value stocks to trade them back to cover the losses. And that would put downwards pressure on it, right? So you basically have to sell really good stocks to then cover your losses. and they're saying, hey, we can't take that risk, let's sell it. Then there's more selling pressure, people sell, people sell. Then, the greed fear index right here, people are going to sell even more. They say, I don't want to lose more money, so I'm going to sell too. And that creates a domino effect. So everybody starts selling, right? And people say, oh, doom and gloom. And I would say, we'll see. We will see. I mean, if you already lost 12% of your money, and if you're going to lose even more, I don't know, but you got to put stop losses in. You got to protect your own money. And you can't listen to what other people say on the news and say, oh, it's going to bounce back. It's going to bounce back. Who knows how far? The correction, the dip correction, you call it, however that is going to be. But you got to be worried about your money. You got to be putting in the right amount of stop losses and the right amount of risk, because you do not want to ride the train down. You want to, 2-3% correction, I'm out. And then once it's going to pick back up and this is over, you want to buy back in. Do we know when it's over? No. Do I think we've seen the bottom yet? Probably not. Am I an expert at it? No. Does anybody else know? No. Nobody knows. That's the whole point about it. Because who knows what these banks are going to do? Who knows this whole world economy? And I looked at it. And so in the United States, we're not really manufacturing stuff anymore, right? So we're just basically designing it. And I've made these statements a long time ago. We're just designing it, and other countries in the world manufacture it, right? So from a business standpoint owner, right? From a business perspective, let's say you are a business owner and you want to sell a product on Amazon, and you buy, let's say, baby bottles, and you sell to the US market these baby bottles. Now with these baby bottles you sell 10,000 a year. Now people are worried and saying, I can't really afford that, so we're going to manufacture less because we're not selling as much. So if there's less demand, you do not want to keep manufacturing the same amount of goods, right? Makes sense, because you're like, hey, I'm not selling that much, so I probably don't need to manufacture as much. So you're going to say, I'm just going to manufacture way less, right? Or we're going to put a halt on it or a pause on it and just let the last shipment come in, and then as it drops low again, you can pick it back up. And with all these other car manufacturers, whatever you want to say, if it's car manufacturer, if it's windows, whatnot, if people aren't buying, you have an overstock, right? You overstock, and then you need to get rid of that inventory. So it needs to go on sale. So then you lose money too, because you have to discount them to get rid of them, right? And so that creates a whole another problem, just like in the stock market, that you got a downward pressure on prices, downward pressure on everything. And that's how it keeps snowballing into bigger and bigger problems down the road, right? Because people aren't spending, people are just holding off, and people that wanted to buy houses, people that wanted to buy cars, people that wanted to buy things with stocks or take loans out against stocks or, their own portfolios, are now looking at, we need to sell some stocks to cover those portfolio loans, right? If stocks drop a mass amount, the bank's going to say, hey, it's time to cover some of that, and you got to sell. So now you're also forced to sell, what puts even more downward pressure on you. So these things, how these happen, is always over the weekend and on a Friday. It's always, and Bitcoin price drops always happens during like nighttime. Always Asian markets and all that kind of stuff, when they're awake, when that stuff happens. It never really happens during daytime. It's always nighttime, right? So now, what's the good news? The good news is that you can buy stocks cheaper. Yay! And when you are following Warren Buffett like I am, I've always been fascinated by this guy, and people in 2021, 2022 called him, he's sitting on so much cash, he's an idiot. And all of a sudden now the stock market's crashing and he's sitting on more money than stocks. And now he's like, oh, he's a genius again. Because Warren Buffett knows that the market goes in cycles. And sometimes we all forget that and just hope that stuff keep going up, keep going up, and keep going up. And that all works well till one wheel of a car breaks. Then the whole car comes to a stop. And it's it's crazy. So we're going to see if this is, in the analogy of a broken down car, we're going to see if this is going to rip the axle off, or it's just a little flat and we repair the flat and keep on rolling. Or if there's going to be ripping the axle off, ripping the bumper off, and having a full blown out on the freeway going 100 miles an hour, 65. We will see that. And I'm going to be watching it. I'm not that invested in the stock market, so I'm pretty good. I've bought real estate. I've bought, multifamily houses. So I am protecting that regards. I have fixed interest rates, so I'm good. If renters don't pay, then I'm in trouble. But I'm hoping that's not the case, because I kind of knew that at one point this would be coming. So I have, a hedge against all that kind of stuff. So we're gonna see. We're gonna see what this is gonna bring. But all these people in my comment section are saying, "Oh, this is gonna be even worse." We'll see. We'll see. But yeah, it is, according to the fear and greed index, that just changed. And I would have said a long time ago that this needs to move over to the fear index, because when you have a CEO of Nvidia being more of a celebrity than a CEO, where he signs autographs and does all this kind of crazy stuff. Crazy, yeah. And I remember in the early 2000s there was the dot-com bubble, right? Where you had a website and you made an IPO and you made millions. And so now we're looking at, is this going to be an AI bubble where stuff just, AI everything, and now it's going to be like, oh gosh, and then all of a sudden AI just becomes like a website, like everybody has one and everybody uses one. So it's starting to look like it, and even more layoffs. And is this whole stock market collapse, I think, wouldn't be too bad if these layoffs wouldn't be so effective. Because if these layoffs would be, like if we didn't have all these layoffs and we're still doing manufacturing, I'd say, the stock market doesn't really reflect on the economy. But now at one point it's going to. And all these people that said, oh, the stock market's the economy, well, you guys are going to be in it. Because when you say stuff like that, and they said, oh, the stock market's doing great, the economy's doing great, not the stock market's doing bad. So White House, I'm going to call on you and saying, hey, the stock market's crashing. You guys made claims for the last 4 years that stocks are up, the economy's doing great. Now stocks are down. So you better come out and say the economy's doing bad now, but that's not going to happen. So they'll find a thing and says, oh, we still created a lot of jobs. Yeah, all of them government and healthcare. So going to be interesting in the next few days. Will this be the bottom? This is what the $1 million question is. If you know, let me know in the comments below. Let's have a discussion, because this is just, I think, just the beginning. This is just how it all started. This is the start where the correction's coming in. And it's going to be really interesting to see if the Fed, at one point, how long it's going to continue, if they're going to start calling an emergency meeting and providing liquidity to the market and start, manipulating the market. And that is something that we need to take into consideration. It cannot, according to, the United States, supreme power, or whatever you want to call it, with the infinite money press. And that's what it is. It's an infinite money press, and that's why it's kind of the supreme power. Why pay taxes? Why do anything if you can just print more money? So you can basically buy up all the stocks if you can just print more money. Why not just, stabilize it? So we're going to see what's going to happen when all these bills come due, and they're going to come due because everything has consequences. Elections have consequences. Borrowing has consequences. And we are now in so much debt in the United States that it's crazy. We're like at $35 trillion in debt. And it like ballooned. It almost like doubled in the last few years. It is so crazy. So And no politician would ever admit that and say, hey, we gotta start paying this back, because if you kick this guy out of office and somebody else gonna come in and says, I'm gonna give you guys subsidies to do this and do that, then he's gonna be in, and that guy who said let's pay off the debt is gonna be out. So yeah, we are in trouble as a country, as the world, because we're all connected. And a few years ago, every own country had its own manufacturing, had its own stuff, and now, since like the 1970s, we're outsourcing to cheaper countries. And when we're starting to outsource, and we made this claims, oh, we got everybody out of poverty, globalization is a great thing. And now we're going to see that, hey, we're going to push all these people back into poverty if we're going to be stopped buying, because we're broke. We are broke, and we cannot afford to outsource. We cannot afford to buy shit. We just need to fix our roads, fix our infrastructure, because we are in heavy debt. We're in more debt than we can carry. But hey, if you ask other people, they say, oh, it's not that alarming. We can always come out of it with printing more money. And I guess that's somewhat right. But yeah, it is crazy. So yeah, we'll see where the bottom is. Bitcoin's gonna drop. We'll see. And I feel like if Bitcoin and all these other cryptocurrencies drop, we kind of get a good idea that people are trying to sell that off so they can cover other calls, other puts that they had, and save some money. Because when you sell on the top and take profits, it's a good thing. It never hurts to take profits. But hey, some people like me, and this is why I am not in the stock market. I get greedy. I see that it's keep going up and up and up, and I never think it's going to go down. And when it does go down again, I'm like, it's going to get back up. It's going to reach new highs anytime soon. And so I'm too emotional about it. So I don't gamble in the stock market anymore. I'd rather gamble at the casinos, where I know I'm going to lose this money for sure, and just be done with it. Like, oh, I'm going to have a $500 budget. If I lose, I paid my taxes, my state income taxes. But when I am gambling in the stock market, I've never put in these stop losses like I recommend you guys. I've never did that when I did it before, and I had like penny stocks go bananas, and then, they went back down again. And I was like, oh man, I like a few $1,000s went to tens of thousands. And I was like, oh gosh, it's gonna be even more money. It's gonna be even more money. And then it collapsed to back where it was like $600, and I had 1,000 in it. And yeah, that happens. Should have taken profits, but it's emotional. It's an emotional thing, and I couldn't control it. So that's why I'm not that much invested in it. I hope you guys do better though. So yeah, that's why I don't give any stock tips or anything else. I said, just let a financial advisor at one of, at Fidelity, State Street, or wherever you invest, they'll give you one of those, and they'll manage it for you. If they take like 1%, but if they make 14%, like they did for me last year and this year, why worry? They do a pretty decent job. So yeah, absolutely crazy. Yeah, this is just, and I keep saying in my videos, get a job, get a side hustle, try to make some money, try to be independent of, your employer. So if you have a side hustle, you're a car mechanic and you think you're going to hit hard times, try to see if you can work on your car on the side, on other people's cars on the side, try to get some extra money to just rainy day funds, because you rather have it and not need it than need it and not have it and have to put it on credit cards, because man, those interest payments are steep. So this is it for this video. I love you guys. Stay safe, make good moves, get insurance on your stuff, and this is it for me from today. We'll see what happens.